What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is March 5th of 2021. Well, folks, I hope you are having a fantastic day wherever you are, and in today's video, we'll not only be diving into analyzing Bitcoin's price and talking about a really important market metric that we need to keep an eye on for a potential sign that the market is oversold, but outside of this as well, spend some time to talk about the next wave in altcoins. As we are expecting altcoin dominance to continue rising alongside Bitcoin's price, the question here remains, which sectors or what specific cryptocurrencies are going to lead the way? We're going to spend some time talking about that, as well as doing a sponsored review of the Unitrade platform, a protocol aiming to build on top of the experience that Uniswap provides. So without further ado, let's go ahead and dive into it, guys. Taking a look over the last 24 hours, we can not only see Bitcoin and Ethereum are down, but because of this, the vast majority of cryptocurrencies are in red territory, some starting to go into double-digit territory here towards the lows. But again, some of these are the market leaders who have been leading the way here, such as PancakeSwap and also Engine, as NFTs have started to pick up. Now, diving straight into Bitcoin, I want to go ahead and analyze what we can see from price here. We're seeing what we commonly see in any correction, what we in fact saw in the last correction here, a set of lower highs and a general support range. Albeit, the point here for the secondary lower high is definitely much further away than what we saw back here. But nonetheless, again, so long as we hold above the support range of 45K, things are playing out like they typically do. Just like back here in January, we had a multi-week correction holding around a general similar support range of around $30,000 in price. If you look at all the wicks, the wicks of each candle here coming down towards around that 30K big even level. Now we're testing at around $15,000 higher at $45,000. So again, I would say above all to not really panic sell or panic buy into the market here. We want to see how things are holding up here in the market. Again, things are doing exactly what they should be right now. After a rally like this where you go from around $30,000 to nearly doubling at around $58,300, which was the high range here, it's pretty typical that you're going to get a correction like this. And we get many of these within Bitcoin cycles. It seems like, though, in this case, the price action is happening a lot faster to the upside, and therefore we're also getting faster corrections, as there has been this new wave of corporate treasurers, this new excitement around Bitcoin as a potential asset class, etc. But and the major point here we want to watch for in a TA perspective is for us to hold on this level. Now, to talk about the really interesting thing here that I want to discuss today, which is, I think, probably one of the clearest signs that we're oversold. The FOMO is out right now, and we're waiting for that new fresh wave of institutional capital, and that is no other than the Grayscale discount, or in this case, the Grayscale premium. Right? Now, the term premium here in this case is what generally people use because it's usually talking about a premium people are paying. So in this case, for every Bitcoin or equivalent that you'd be buying through Grayscale's ETNs or exchange traded notes, which are available through traditional brokerage platforms, and has been a huge on-ramp for people to buy Bitcoin. At the same time, usually it tends to be a premium, and nowadays it's actually going to be becoming a discount, right? So I want to go ahead and actually visualize this for you guys here just so you can understand. Grayscale's GBTC product actually has real Bitcoin being backed behind it in this case. And it's the most popular trading product out there for people who like to trade Bitcoin. And it's also provided a huge demand surge for actually acquiring Bitcoin off the market in order to issue new shares of GBTC. However, back here for the last really couple of years, we've seen that the GBTC product generally trades at a premium from anywhere of around 10% all the way up here to a peak here in December of 2020, around 40%. And ever since then, we've actually had something that is a first for some time in Bitcoin, especially throughout this bull market that we've seen all the way back to March. And that is that Grayscale's GBTC is now at a negative range comparative to its Bitcoin that it actually has backing each share. In this case, the Grayscale discount rather than the premium. So what does this mean for the market? Well, it generally means here that as Grayscale has probably issued a ton of new shares of GBTC, has allowed people who would buy Bitcoin through brokerage platforms to be able to get more of those shares in this case, as they've bought more Bitcoin on the market and issued more of these shares. It's basically brought up a point here that right now the FOMO that was existent back in December has been declining, generally speaking, for Bitcoin, as probably two factors have grown. First off here, as you've been getting more and more people participating in crypto, a lot of people are still going towards traditional exchanges, and therefore maybe Grayscale had acquired a little bit too much Bitcoin in this case to where there's actually a negative premium in this matter. And outside of that as well, it also has to do with probably some altcoin dominance or altcoin increased interest. But I digress here. There's also a much more important point to all of this. Those are kind of the general pointers as to why there might have been a decline here. The reason it's gone really negative here is because of all these new issued shares, and there's not the excitement to per se buy them through brokerage platforms. In this case, there's actually going to possibly be a negative here in this case, where after so much time, the valuations have been conflated and overvalued, they're now going negative. But what's important to understand about this is that even though it's understandable why it might be going negative, it will eventually correct up, likely back up to its fair value or higher. We've seen this historically speaking, and for arbitrage traders who look for these types of opportunities, seeing GBTC at a discount in this manner, similar to how they would seeing Bitcoin at a discount 10% on Coinbase versus maybe an exchange like Kraken where they could sell the exact same Bitcoin, that's an arbitrage opportunity. And the more and more this goes down due to people either just funding out of Bitcoin, thinking that the rally is over, this is going to give a massive multi-million-dollar opportunity for arbitrage traders to make money on GBTC on the rally up. So I would say again, to watch as this negative premium goes lower and lower, that is going to be a further signal here that it's time to probably go long on the market or average in. And just to kind of showcase how the premiums and discounts have kind of showcased over time, you can see how the chart generally mimics Bitcoin's price movements. But we can also see here as well that the previous highs here back in December 2017, where Bitcoin's price was a little bit below 20K, is really not that far from where we're at right now for the GBTC share price as we've started to enter into discount territory. We should be up higher in this case, but technically speaking, because we're at a discount, we're actually not too far away from that range. So I would say to watch for around here at $39 to $40 on GBTC. As much as I don't do technical analysis on Grayscale's GBTC product, and you really shouldn't, at the end of the day, it actually probably does matter because some people who are trading GBTC or investing in that product are looking at this, and they're going to look, especially the smarter money in this case, is going to look for that discount opportunity to have an arbitrage opportunity for GBTC. But again, this has been something that's been written about for the last couple of days. Again, I think it's something you want to watch here in regards to deciding whether or not to average into Bitcoin. Now, let's go ahead and talk about altcoins here, guys, because as we've discussed here on the weekly and the daily chart, we're holding up very well. We've been able to hold on a previous resistance range here and make it support, and we're looking to kind of scoop up your altcoin dominance. Has been slowly edging up, looking like it's coiling in and waiting for that breakout opportunity when Bitcoin starts to get some serious surge in capital into the market. But the question here remains, of course, we already know in this case, if you guys are like me, you probably are exposed to altcoins. The question here is what cryptocurrencies are going to lead the way? Which ones are going to be at the forefront of the market when it comes to that secondary surge or secondary wave from what we saw back here in January? Well, let's go ahead and take a look at some of the ratios here. First off, I want to take a look at ADA to Ethereum, right? So I think this is going to preface our discussion here overall about what players are going to be leading the market. We really have a war going on here right now between two different prominent solutions in the market. And quite frankly, guys, I'm not here to just exchange my biased opinion. I also am very excited to see other alternative chains come out, but there really is two different paths forward here that will determine whether or not Ethereum and the Ethereum ecosystem as it is stays as the dominant player, or you have other ecosystems like Binance Smart Chain, like Cardano, like other smaller ones like Avalanche, a few of these other ones coming up that might possibly come in to compete. And what we saw really over the last month in this case was those alternative layer ones winning out. We see it here on the ratios, the ADA to Ethereum ratio, where in this case, and I actually have to adjust it a little bit here, Cardano, broadly speaking, performed around 380% past what Ethereum did here from back here at the beginning of the year. That's really good performance, and to those who have been holding Cardano, they've been kind of proven right in this case that there is some exciting things coming through the Cardano blockchain. But the question here is whether or not that can remain, and so far we've seen a pretty big fade here on Cardano where Ethereum is starting to either hold out better or in this case might be gaining some substantial dominance when the markets start moving up. It'll be a question if this goes down, in this case Ethereum is winning now. And the same thing goes here for Binance Smart Chain. Let's take a look at Binance here. BNB ETH here. We actually luckily have a trading pair on Binance for this. Look what's happening here. And this is why ratios are so important, you guys. It's not just about looking at the Bitcoin pairs, and it's most certainly not just about looking at the dollar pairs. We want to see what cryptocurrencies here are holding up against other cryptocurrencies. And whereas Binance, or BNB in this case, have been in the decline to Ethereum and found support at this double point of resistance, rallying up here off of the news of Binance Smart Chain, we're now barely holding by a thread here on top of that previous resistance range. Can we repeat history in this case? I mean, it's a little bit different because we had this major decline here from 2019 down to 2021, and this was a resistance range from much longer ago. I think the market's going to tell us here whether or not layer ones, other alternative layer ones, are going to be the solution, or the other solution that isn't really investable in this case outside of owning Ethereum and the core protocol tokens like Uni, and that is layer 2 scaling such as Optimism or ZK rollups. These two solutions here are really coming to the forefront, and they're racing to come out to market here in the month of March. If these get delivered properly and Uniswap and other protocols out there migrate promptly over to those layer 2 solutions like Optimism, it will likely solidify Ethereum's position as the #1 enterprise and DeFi blockchain protocol. It's not me trying to be biased, guys, but if they can do that and get gas fees down to reasonable ranges, the expense and the time and the lag of trying to migrate that over to an alternative chain is going to be quite cumbersome. And I can tell you that a lot of the protocols, whether through governance processes or in this case through the actual founding team members who are developing it, are likely not going to make those changes if Optimism works. And what's nice about Optimism as a scaling solution is that the actual code that operates through the Ethereum virtual machine, or EVM, can be ported straight over to the optimistic virtual machine. It works just as intended as it would on layer 1 on layer 2. So this is again where I think the market is really on edge here. As ADA broke out of its consistent range here, as there was optimism and a bit of excitement around not only the further developments of Cardano, but also as well the potential for it to be a new competing smart contract platform. That obviously got a lot of investors interested. But outside of that as well, Binance Smart Chain with its rise of PancakeSwap and Venus and a few of the other DeFi projects, these two alternative chains are really the potential other winners in the space. And I gotta be honest with you all, I love seeing this kind of price action. Hats off to those who rode those waves. But sometimes it's best to diversify and not put all your eggs in one basket, especially when things are on the higher end like this, where historically speaking, we haven't been at this range much in the past. And I say that with all due respect to other alternative layer ones, guys. This isn't, again, about me trying to be biased here. It's about making sure we can park our capital where it's best going to serve. And ratios generally can tell us when things are overextended or undervalued in this case, depending against other cryptos. Liquidity cycles, and it's best to be where that liquidity is going to flow into before it does so. All right, guys, that's it in regards to analyzing the markets here. I hope you all enjoyed this, but let's go ahead and dive in to this sponsored review of Unitrade. Alrighty, everyone. So in today's sponsored review, we're going to be taking a look over a platform known as Unitrade. Now, for those of you who are hearing about them for the first time, I would say to think of it like a layer 2 solution on top of the existing Uniswap protocol that allows you to not only have a better user experience when trading if you're more active than those who are just doing simple market orders, but on that point of wanting to do something outside of simple market orders where you're just filling your order immediately at the current market rate, Unitrade offers a really unique feature to be able to trade like you would on a traditional exchange, offering the functionality of limit orders where you can buy in at a specific agreed upon price. And that's the really cool thing about Unitrade as a protocol. It's one of its biggest features here that it allows you to actually have traditional order book functionality on top of an automated market maker like Uniswap, which usually again is operating on simply market orders. Now, I want to go ahead here and dive straight into the platform here because the platform itself is actually relatively simple here. You've got your sidebar here that has a lot of your action items from taking a look at the order book, searching for specific pairs, and also taking a look at market analytics if you want to just take a look at some of the data for a specific cryptocurrency pool or pair in this case of coins. On the side here as well, you can see actual history here of trades that are being processed through the Unitrade application. And in the middle here, we've got really what matters most. Now, in a traditional automated market maker, whether you're using Uniswap, SushiSwap, whatever it may be, Binance, Binance's Pancake Swap, whatever. In this case, you've generally got a simple structure here of, in this case, picking the asset you want to swap to another asset, right? It's very self-explanatory. Well, as much as we can do this through Unitrade, we could, for example, trade 10 ETH worth about $14,600 into 549 Link in this case, right? I could just go ahead and fill this market order and swap from these two currencies. I can also do something different that I can't do through Uniswap right now, and that is limit order functionality. So let's say, for example, I had 10 ETH to trade, just like I did in my original market order in this case. But instead of buying Chainlink at the current market price of $26.25, I wanted to wait until it goes down to $20. Now, the problem with just doing market orders is you have to wait for when that comes around and you actually have to place that order. Plus, along with that as well, you might want to buy at $20, but again, you won't get it at that exact price. You'll incur slippage. And this is a really cool thing here where with the limit order functionality, I can actually get more Chainlink and I can also have my order priced in this case, it's set and established in order to execute my trade of 10 ETH to 731.573 Chainlink. So it's really simple. That's the general thesis of limit orders, and they add a lot of benefit in this case on the already powerful functionality of automated market makers. And I gotta say, Uniswap in this case has built a great protocol, but this kind of functionality is what a lot of traders are looking for if they're actually to make that leap from traditional exchanges like Binance or Coinbase to automated market makers. Now, one important thing that I wanted to showcase here as well on the user experience side, now that we talked about the simplistic trading functionality that's available through the platform. In this case, we also have the ability to look at some really interesting market analytics that aren't usually on the Uniswap website. You can see here that we have different pools. If I'm looking at the Uniswap token and the liquidity that are in each of those pools when trading against one asset to another. But I can also see here as well the 24-hour volume, largest buy order in the last 24 hours, as well as the largest sell order. And then outside of that as well, I can come down here and get some really nice candle charts here for the change in price, as well as some volume down here, and also any of the potential trades that have been executed. So again, this is a really cool platform overall. It gives you a lot of data and metrics that you traditionally wouldn't get and gives you more of a traditional trading experience. Now, one thing that's really important here about actually providing limit order functionality is talking about how you actually go about doing it. And one of the really cool things here, even though we don't have all the time to really dive through the technical intricacies, what's really nice is that Unitrade here has actually provided open source code here for the order miner, which actually allows in this case for the limit order functionality. So you guys can read through the Medium article here. They've got a link straight to their GitHub. You guys are welcome to read through if you want to learn about how it actually operates and how they're able to provide limit order functionality. But at the end of the day, this is really cool because if it gives you this functionality to trade in a limit order fashion, giving one of the major features that people want, this again can bring a lot more people to utilizing protocols like Uniswap, where the core protocol itself doesn't have to make the upgrade. That's the one thing I'll say overall is that, in the future, maybe Uniswap will provide limit order functionality, but for now, this is a really unique selling proposition for Unitrade as a protocol. Now, one thing I wanted to talk about is Unitrade does have its own native platform token called Trade. In this case, it's a relatively small cryptocurrency, but overall what it does in this case is that some of the fees that are collected through the protocol go back into purchasing up the Trade token. So similar to a lot of utility token protocols out there on the market. And along with that as well, they just actually migrated their native token to the Binance Smart Chain through their own Binance Smart Chain bridge. Now again, overall, I think this is cool. It's awesome to see that they're moving their own native token over. But for me, I hope more than anything that alongside Uniswap and some of the other major protocols, that Unitrade and some of these projects are looking at being able to provide a seamless experience on some of these alternative chains until we really see layer 2 coming out. But again, above all, this is really just kind of a surface level overview of what's going on within the Unitrade platform. If you guys are interested in learning more, I'm going to leave a lot of resources down below in the description so you can take a look into it. My general consensus here is that offering limit order functionality is a really cool feature. It's a really great unique selling proposition or USP. But at the same time, I really would love to see this protocol develop more. I want to see more people using it in this case, more review of the code and stuff, things of that sort, as I continue to learn more about the protocol and see more of the developments. Now, the last thing that I will say overall that is really exciting is they've got a pretty nice roadmap here. Some things like gas optimization and reduction here, which to me liquidity is really exciting. And outside of that as well, being able to have decentralized stop loss orders. So again, not just providing limit order functionality, as well as other things like support for rebase tokens. So things like benchmark protocol or Ampleforth, being able to actually function that into the limit order, which is a bit tricky. So anyways, guys, that's it for today's review. There's a lot of different features you guys can read into. I highly recommend you check out the website. But until the next video, I'll see you all in the next one. Take care, everyone.